Tony Calloway, the private money godfather here. And now I want to give you some rules of thumb on doing cash out refinances. I want to talk refinances in general, but cash out refis. All right. Now, you bought a property, you've either held it for a long time and accumulated equity, or you've done some renovations and repairs, and now it's appreciated because of your after repair value having, I'll call that forced appreciation, having gone up in terms of the value relative to comparable sales. And so now you want to capture that cash. You want to put some money in your pocket. All right, so just as a caveat outside of that, anytime you buy a property and put money into it, you can immediately refinance that and get the cash back out that you put into the deal. Now, that's not going to give you your appreciated value. It's just recouping your cash into the deal. You can do that immediately. Let's say you got a hard money short-term financing loan. You bought it with, say, 75% financing. You put your down payment into it, then you borrowed money to do the renovation where you can recoup all of that. Okay. What I'm talking about this time is taking cash out. Now, we doubled the value of the property, and so you want to take some of it out. All right, on top of the debt that's on it, refinancing that debt. That's why they call it a cash out refi. So generally speaking, there are two governors. All right, one is the value of the property relative to the debt that's on it. The other one is called the debt service coverage ratio, or DSC, or debt service coverage ratio, and I'll do a separate video on that. Now, you generally have to hit a mark in terms of what the mortgage payment is going to be relative to the debt that's on the deal. So let's say that general rule is 1.25, which means that if you have a $1,000 mortgage payment after you refinance, then your rental income needs to be $1,250. All right, so that's 1.25. So if you meet that mark or exceed that mark, wonderful. But you generally have to hit that. So that means that caps how much debt you can put on relative to the interest rate and term, because that's going to determine what your mortgage payment is, and your market is going to determine your rent. Generally, the lender is only going to go with the market rents, even if you've got some ridiculously crazy, wonderful high rent that you're getting from the actual tenant. All right, so let's talk the number. The number is pretty simple. Most lenders, if you're hitting that debt service coverage ratio, DSCR, they'll generally do 75% of the after repair value based on the appraisal. All right, so let's say that you bought a property, keep the number simple, for $100,000, which means if you borrowed at 75% of that, that means you got $75,000 in debt. Let's say you did another $25,000 of borrowed money for your rehab, so that means 25 and 75 is $100,000, so that's a debt on the property. The property is now worth $200,000. So what's 75% of 200? Well, that's $150,000. All right, so that means that the total loan that you can put on property is $150,000. So now if you owe 100 and you can borrow 150, that means you can pay that 100 off, $50,000 is left over. Now, it would be wonderful if you could put all that $50,000 in your pocket, but the private money brokers got to get paid, the lenders got to get paid, the appraisers got to get paid. You know, you got your transactional fees that come out of that. You saw me do my hands like that. I love helping people to power dreams with private money. But, you know, those are the numbers. So when you, again, there's the sales speak that other folks will say they'll do up to 80% and things like that. Yes, some will, but there's always a fine print. Experience, debt coverage ratio, certain markets, you know, those kind of things as far as single family residential transactions. So just for rule of thumb planning, 75% of the after repair value, minus out the debt that's on the property, and then minus out transactional fees, and that's going to be what you'll net. Okay, and so get in contact with us at privatemoneysyndicate.com. That's privatemoneysyndicate.com, and let us get the details on your deal, and in just a little bit we can tell you how we can help you to power your dreams, what you can put in your pocket, and how you can continue to grow your portfolio with private money. Thanks, and we'll be talking to you again soon.